Hi, today I'm going to talk about how stock market has evolved in the last 25 years, and for this I've been collecting lots and lots of data from the Wealth Creators survey conducted by Motilal Oswal. I happened to listen to some of the interviews of Ramdeo Aggarwal, the CEO of Motilal. They were extremely interesting insights in terms of how this market has evolved in the last 25 years. There have been hundreds and hundreds of successful stories in terms of companies that have really made big. A lot of individuals, billionaires from very ordinary citizens, very successful stories. But at the same time, we have lots and lots of failure stories. Whenever we discuss success stories, they need to be discussed in the context of failure stories also. But I'm going to talk only about the success stories, and I will give you a glimpse of some companies which have not been able to make the mark and some of the companies which have fallen by the wayside. And it's going to be a little long, and I request you to watch this because I'm going to share lots and lots of mind-boggling figures with you. And each of those figures have been duly corroborated by the wealth survey results done by Motilal Oswal, Ramdeo Aggarwal. We will be talking a lot about that. Now, one thing extremely important in 25 years is that there have been so many busts and booms. But when you look at a time frame of 25 years from a long-term perspective, the perceived volatility that we might have witnessed on a monthly or a daily basis, or the major booms and busts. Some examples are 2007, 2003 bust, 2020 corona. When you consider a much larger time frame, these clutters will be eliminated and they will be completely smoothened. In statistics, we call it as exponential smoothening. Okay, so if you look at the pre-COVID era, we were sitting at somewhere around 44,000 Sensex. Our Nifty was close to 14,000 approximately, and we have gone through a bust. Okay, we fell down to 9,000, and the Sensex fell down to somewhere around 30,000 or something like that. But in just a period of 7 months, we have been able to ride the wave, and we have crossed the pre-COVID figures, and that's the strength of the Indian market. And people who rode the wave, they were extremely successful. And there are a number of people who have not been able to ride the wave. Because if you had invested X amount of money in the month of May, in 7 or 8 months, you could have tripled that money. Reliance was 900 rupees, if you remember. And today it's more than 2,300. Now it's come down by 100, 200, but that's fine. There are hundreds of such success stories and stories of so many people who have missed the bus. I know people who have lost huge amounts of money in HDFC. I know a guy who purchased it for 1,800 rupees. It fell down to 1,700, went down to 650 rupees, 1,650. That guy had a notional loss of 1.5 lakhs. He waited and waited, but when HDFC touched 1,800 and when it became 1,820, he quickly made some profits. Some 10,000-12,000 rupees profit. He thought he will make that profit and then rebuy those shares after it comes down to 1,800 or 1,700. The lesson is clear. The guy was sitting with this loss for 3 months and 4 months, lakhs, but there was a little profit of 10,000, 15,000 rupees. He quickly encashed. But you know what happened to that? It went up to 1,875. It went up to 1,900. I advised my friend to buy those shares back again. But he was saying, no, I sold it for 1,820, so I can't buy it at 19. Psychology, it's a psychological barrier. But when it touched 1950, this guy decided to buy it for 1900, but it didn't come down to 1900. Today it's selling at 24, it has crossed 2500 today. It's not years, we're talking about a month, 2 months back. So that's the issue, because that's the nature of the share market. So we have to sail with that, okay? Trend is our friend. So the only lesson that we need to have a long-term view. Anybody who wants to make money out of small fluctuations, it's difficult to make money. Intra-traders do that, intraday traders do that because their job is 8 hours. They sit in front of the laptop, they do those calculations, they do their homework. That's their job, that's their brain. Those guys can make money. Little bit of understanding the concept, little bit of mathematic calculations, they can make money. But lots and lots of guys who work in corporates to do this. Generally people think that it's too easy. I'm yet to see a person working in corporate who has actually made money in intraday trading. I did some analysis and I just thought I will share it with our friends groups. I will be posting up in the social media also. In the last 25 years, I've thrown lots and lots of surprises. All of us are aware of that. People curse the time, but let me tell you, the time is good for successful companies and time is bad for bad companies. Successful companies have grown to unimaginable heights in the last 25 years. Simple example, Infosys. In 1995, if somebody had asked a stock market expert in terms of where he sees Infosys in the next 25 years, nobody would have ever thought of it. Ramdeo Aggarwal mentioned it in one of his interviews. Mind-boggling data I'm going to share with you. In the year 1995, we had a list of some 500 companies which were sizable. Of course, there were thousands of companies, but out of which there were 500 top-class companies. Only 100 out of those 500 companies actually created wealth for its shareholders. Remaining 400 companies either fell by the wayside or those companies ceased to exist. Such has been the mortality of these companies. If you look at the history for the last 25 years, we're actually talking about the last 25 years from 1995 to that. Harshad Mehta's time was 1991, 1992. There have been collapses, lots and lots of people learned from those experiences. So many new regulations were put in place by SEBI and a lot of new things came, and then 1995 was the time of the internet started, and we have traveled a long way in the last 25 years. But before we harp on this subject, we need to realize that returns from the stock market are slaves of growth and profitability. That's the first edifice. That's the first lesson that we need to learn even before you embark on this study about share business. We will talk about Infosys. Infosys company is very close to my heart. You can write 1,000 case studies. Can you guess what was the profit of Infosys in 1995? Guys, it was just 13 crores. Any guesses how much is it now, 2020? 16,000 crores. This is from Motilal Oswal, Ramdeo Aggarwal. It's 1,258 times, a mind-boggling number by any stretch of imagination. I came to know of these figures only when I went through that survey report, Wealth Creator Survey report. That clearly means that the CAGR of 23% year on year, if you look at 1995 profits, it's very minuscule profits of itself.